Best top 5 tips for private student loan consolidation. Number 1. Getting a lower monthly payment. The biggest advantage that most former students cite is being able to lower the amount that they owe every month on their student loans. In most cases, this is done by lowering the interest rate on the loan and/or lengthening the payment term. Doing both of these makes it possible for a borrower to pay less in interest and get more time to pay their loans off. Number 2. Getting a steady monthly payment. Another key advantage to refinancing student loans is the ability to stop a monthly payment from fluctuating along with federal interest rates. For many people with federal student loans, it can seem as if they are being held hostage to the political drama in Congress. By refinancing, however, it is possible to lock in a single interest rate for the life of the loan. This has the crucial advantage of being able to predict what a person's interest payment and payment will be years in advance. By having this kind of stability, a person can make financial decisions without worrying about a sudden rise in interest rates, making it impossible to make their payments on other loans. Number 3. Being able to save money towards a home or retirement. Because their monthly payments are lower and stable, many former students discover that another great advantage of refinancing their student loans is that they are able to start savings accounts. In extreme cases, many young adults are able to use the money they save each month to build up their emergency fund. In other cases, however, the money saved can go towards saving for a down payment on a house or being able to contribute to their employer's retirement fund. Being able to save money is a lot bigger of an advantage than it may sound like at first. Building up savings is the most important thing that you can do to increase your wealth and financial stability. If you're currently living paycheck to paycheck, think about what would happen if you were to suddenly lose your job or have your hours cut back. Number 4. Improving your credit. With a steady monthly payment and the ability to start saving an emergency fund, many former students discover that their credit scores start to rise. In truth, this is actually due to several reasons. To start, refinancing a lot of student loans often lowers the number of creditors on a credit report. While a few creditors is viewed as a good thing, people who owe money to a lot of different agencies and banks tend to have lower credit scores. More importantly, if a lower and steadier loan payment helps you to make your payments on time and for the full amount, you'll probably notice a drastic change in your credit score. Aside from your credit report, being able to show a bank that you can easily handle your student loan payments and that you have some savings will make you a much better candidate for getting a loan for a home or car. Number 5. Paying off your other loans. Being a good candidate for a loan means that you'll be in the position to pay off your other loans. After you refinance your student loans, you'll most likely want to move on to refinance your other debt. In some cases, a bank will allow you to refinance your credit cards and even your auto loan in the same loan with your student loans. In other cases, you will need to find a separate loan to refinance all of these lines of credit. Either way, you'll be able to lower your monthly payment and, if you want, pay off the other loans a lot faster. To consolidate your private student loans or apply for a new private student loan, please click on the link below this video. Thank you.